Hello everyone, this is the first episode of my 2026 Portfolio Challenge series. Quick disclaimer, this is for entertainment and educational purposes only. I am not a financial advisor and this is not financial advice. This is all done on a paper trading account and these are all simulated trades with no real capital at risk. Just a quick overview. What is this challenge? I'm doing a portfolio challenge with 4 different portfolios across 3 different alpaca trading accounts. More on this later. The portfolios are my 2026 portfolio, which is well-rounded, I think, and similar to my real portfolio, but with different weights to try new, riskier trading. A deep value portfolio, which is just a simple math formula using PE ratios. I have no other inputs into this. I'll rescan it once a week, and I'll update any changes. Then there's my own value portfolio, which is mostly just the value stocks from my main portfolio. So there's a lot of crossovers there, but it's just a value portfolio subset of my main portfolio. And then finally, there's a meme stock portfolio. More on this later. And then the goal is to see how the different parts of my own portfolio perform with higher risk. So here's my own 2026 choice portfolio. So this is very similar to my main portfolio. You can pause this if you want, see the allocations, etc. All of these are starting out with 100,000 fake dollars using paper trading. There is a difference in weights based, so I can perform options trades on a few of these. For instance, Robinhood or ticker Hood, you can see it has an amount of 100 stocks, just so I can sell covered calls on this. Same with Celsius with the round 200 and ELF with 100. Nike is 140, just because that fits the portfolio weights. Now, a few notes on some of these. Hood, which we just talked about, I do not see it growing much at all. I think it's pretty fairly valued, and if it grows, it's mostly a momentum play. But due to the high IV in the options chain, I think I can get a pretty decent return on this just by selling calls, at least until the options chain or the IV itself reduces over time. Next off, ELF. So they've been very aggressive. I like that. I think that they're growing pretty fast. I think that the balance sheet does not indicate exactly how much they're growing and how much they're going to grow. My value has them at only 6% higher than they are currently, but I wouldn't be surprised if they perform 50 or even 100% this year. So that's a decent stock that's not a value play here. And then finally, Amazon. The balance sheet doesn't show it, but this is mostly a gut play for me. I've got them at 3% growth for the year, but there's so many avenues of growth that I'm not sure why I wouldn't invest in this stock. And then finally, there's Costco. I love Costco. I think that they have decent growth and it's a very stable stock. So maybe this will lend some stability into my portfolio. So my portfolio goals, these all seem very optimistic, just saying that ahead of time. If I don't reach any of these metrics, then I'll do some adjusting in my own investment style, but I've reached these goals almost every year for the past few years, the expected case goal, so I'm pretty optimistic about this, and I think I can reach these. In general, the bear goal, if things go wrong, if not all the value stocks perform well, I'm still expecting 15% growth. The expected case, which is what I expect will happen, I think I can reach 25% consistently. And then the bull case growth goal, the bull case goal is 35%. If I can reach 35%, I'll be ecstatic. It's going to be a great year. Next up is my deep value portfolio. Again, you can pause this if you want, look at the stocks. Like I said earlier, I did not look or scan or filter any of these myself. For instance, Ford, I personally would not buy it at this price, and my value indicator also says that it's only a 10% growth stock. I also don't see 10% growth. And the rest of these, to be honest, I don't even know what most of them do. But this is it. We'll see if they perform well. This is back tested over many years using this formula. So we'll see how it performs this year. The goals for this, not as much. The bare goal is to stay positive. There's a reason some of these stocks, I think, are in the negatives over the past few years. So I hope that reason isn't just lower PE and that this actually performs well, but yeah, so it's just to stay positive. The expected goal, this is just for my growth stocks. Some of these stocks, like Siri, I think that they can grow and they might carry this 15 to 20%. That sounds good. Bull goal. So this is in all my back tests. Most of them didn't reach 30%, but a few years did reach 30%. So that's what I have in my bull goal. Bull case goal. For my own choice value portfolio, so these are mostly the value stocks from my main portfolio, just with different weights. Again, to allow some options trading here. I've got some cash left over here. You'll see why I have these two written down like this, but the cash is just if I see another opportunity or one of these drops too much, I can dollar cost average. Yeah, as you can tell, most of these, other than Amazon, which is my own gut feeling growth, most of these mathematically should perform fantastic. So here's to hoping. And then these are going to be the same goals because historically I'm a value investor and I've reached these goals, like I said, most every year. So it's the same 15, 25, and 35% goals. I'm fairly confident in these stocks, as I said earlier. So let's just hope and we'll see how they perform. And then finally, the meme stock portfolio. This is not a derogatory term for me. Meme stocks are just stocks that have very large internet followings. So the big famous one is GameStop, AMC, Rivian, Tesla, and then Rocket Lab and ASTS. They joined this year. Currently in this portfolio, I'm only holding GameStop because the rest are too overvalued for my liking. I've got my own fair values for all of them. Once they reach that area, I might buy more. I think the closest one to this year is going to be Rivian. Maybe Tesla if something happens, but currently it's just GameStop. This is going to be just to test out my own trading style using covered calls. These stocks all have very high premiums and they all have a base value historically, so that's the whole play here, is just to play around the covered calls all year. For the goals, I have a bit loftier goals here just because I'm fairly confident in reaching these. The high IV allows me to pull my bull case forward to 50% and the bear case up to 20%, with the expected case at 35%. Now this is obviously if nothing bad happens, if the companies don't go out of business or anything like that, and this is all based on them having high IV. So now earlier we talked about the 4 portfolios over 3 alpaca portfolios. So why is that? Because alpaca limits paper trading to 3 portfolios, as you can see. So the 2026 portfolio is 100,000. The meme stock portfolio is also 100,000. As you can see, it's just GameStop. I've got some options already sold here. And then the value portfolio is 200,000. And this is going to be both of them combined, both the values combined. And I have it allocated on my Excel separately, just so I can track it. And as you can tell, 200,000, a bit more than that now because I've been holding these for a day or two. And I'll just keep updating all these portfolios every week, any moves I do, any options I sell. Let's just hope for a good year. Yeah, GameStop's already performing pretty well. It just had some pretty big news. So the option isn't doing fantastic, but we'll see. So yeah, here's to a good year, and wish me luck.